Bullseye Zone. My name is Kirk David Phillips, and I make common sense of the crypto space. So the main reason for the big show today is that we are on the verge of the Bitcoin halvening, an extremely rare event in Bitcoin and in the crypto space. Only once about every 4 years, where the block reward is cut in half by 50%. So maybe, and I'm joined here, of course, by the legendary OG Cryptogenic. Thank you for being here today.
Hey, Kirk, thanks. It's good to be here. This is an exciting time in Bitcoin's history. You know, these are events that come once each time and then they're gone, you know. It's a huge impact on the market, on people's psyche, on the protocol.
Can you say just say a little bit more about the happening, if there's, just for anyone who may not be familiar?
Well, as the Bitcoin miners produce blocks, that's their job. They take bundles of transactions and choose which ones to include into the next block, and they get a reward on that. That reward is called the Coinbase, which is where Coinbase, the exchange, got their name from. It actually was named first in Bitcoin. The Coinbase's reward was the only thing rewarding miners early on, because if there was no transactions on the network, they were getting nothing, you know. So that was the only source of new Bitcoin emissions back in the day. And you know, every time the reduction is 50%. So that's 50% less Bitcoin being generated every single block. That's 10 minutes on average. So when you think about that, you think, oh well, you know, the halvings are getting less and less and less every 4 years, but really it's still a 50% reduction every time. So that's hugely impactful on the miners. Their revenues are slashed in half. I mean, they make most of the revenues from the Coinbase block. So when you bear that in mind, that they have to, you know, if you look at the profit margins, they make about 20%. Some are a little bit leaner, some are a little bit better than that. But if their expenses are the same, but their profits cut in half, they have to sell a little bit harder, because they either have to shrink their margins, they have to reduce how much mining they're doing. They have to adjust, and it's a scary time for them. Honestly, they think about it, you know, way more than the average person does.
Yeah. Well, if you think about it, it's interesting because we talk about all these dynamics, including then you've got the price kicking in. So you got the price what it is now, supply goes down. So revenue basically in the short term is like instantaneously cut in half for miners. But then over the long term, we know what may happen in the price. But, you know, it's interesting because we had, you know, basically we're 15 years in, right? January the 9th, 2009, first block, Genesis block. And here we are 15 years. I guess we're in the beginning of the 16th year now, right?
Oh, yeah.
And it's really largely still an experiment because, you know, Satoshi, we don't know if this, I don't think he was like the design of Bitcoin is genius, but the economics of, you know, that the fact that we have this every 4-year reward happening, and that the reward started out at 50 and so on, like that's still a bit of an experiment. I don't think that was like to me, that piece of it seemed like a leap of faith, and we don't know what the impact is going to be. We've seen it, and now we're in our fourth one.
Right. And, you know, from this may be a little bit insightful to think about, but every time there's a halving, the miners start to realize at the last second, they're like, oh crap, you know, I'm going to have to sell a lot, you know, right now, because I'm going to be getting less Bitcoin later. And they think to themselves, oh, so is every other Bitcoin miner. And so right before the halving, there's always a little dump, and then there's a supply shock. And so the combination of those two things is like a springboard. You know, I think a lot of people are looking at the charts. They're thinking, oh no, price is going down. We've started a downtrend. It's all over. Bitcoin didn't make a new big all-time high. It just had a little all-time high. It's doom and gloom. And it's funny because that's what happens every time. Right before the halving, we have a new all-time high, just a little bit. It teases with it, and then it pulls back, and it pulls back hard. And then the miners can't sell as much because they're not getting as much rewards. And there's always a springboard effect after the halving.
Yeah, that's a good way. Let me segue into a screen share here, since we are inspired here today, and the purpose of this is the halvening or the halving. Some people call it halvening. They've been
Yeah, the halvening.
It's halvening in Bitcoin speak. So here is let's share this one first of all. This is actually thehalvening.com. So it's a real simple
nice
page. There we go. 41 blocks to go. 6 hours, 49 minutes, 41 seconds. Join the party. I don't know what's going to happen here, but I don't know. I'm not sure what else happens on this site, but maybe that rocket ship takes off.
A party. Yeah. Keep calm in mind.
Let me share this one other one here. This is the blocks live countdown. Thank you, the block. So we can see here again, 6 hours, 53 minutes, 35 seconds. But let's go back to the beginning here. Let's start at the first halvening. So January 9th, 2009, Genesis block. We have 50 Bitcoins produced in each block at that time. The price. So the first halvening was November the 28th, 2012.
I remember that. I remember that very well. I was on 50btc.com.
Oh, yeah.
And 50btc.com was a miner. You could a mining pool. You could actually go there and download a exe file and just fire it up and start mining. And it had like a little GUI in it, and you just chose solo or pool. It was like a little option. You just had 2 radio buttons and a go button. That was pretty much it. It was a CPU based miner. And it worked really well.
Wow.
And
you mean like a little USB style thumb drive kind of a miner?
No, it was just an exe file that ran in Windows. You didn't even have to reboot your computer.
Gotcha.
It was so not fancy. It was very low tech, you had no idea if it was even working or not. Like it was just on or off.
Right.
There was not really any statistics there. What you would do is go to 50btc.com and log into your account, and that's where you could see if your miner was actually functioning or not. And I thought to myself, I'm like, oh no, they've named themselves 50btc.com, and now the reward's not 50BTC anymore. People are going to be like, why is it called 50BTC.com? And they have 4 years of it before it happens again. So are they just going to rename their domain every time?
You have to add another one. Yeah, each domain will have its own pride and joy.
Right. And the renaming thing shook them so hard, they only lasted like maybe a year after that.
Oh, really? Oh, wow. Okay. Interesting. Well,
yeah, they didn't last very long at all.
Just think about it. Too. It's an interesting point you're bringing up on that, because think about this: if you just deployed that or something similar around the same time period, right? This, so in other words, let's call it in the easier days of Bitcoin mining.
It was easy.
Let's just say you just got one 50 BTC block reward. That was it. Like that's the only thing you ever did in crypto. You just held it the whole time.
Oh, see, that's the trick, right?
Right.
That's the trick, was holding it.
You'd be a legend. I mean, 50 would be $3.5 million, but we're just getting started. But if that's all you did, I mean,
right.
That's it. It'd be amazing.
I remember. I actually soloed a block. I got a 50 BTC block in that.
Really? Wow.
Yes, and I was just like, oh my gosh, that's like $12. This is the craziest thing ever. It's free money.
Crazy indeed. Because then moving on to July 9th, 2016, we go from 25 BTC to 12.5, and the price at that time was $6.50. Then we moved on to May the 11th, 2020. We went from 12.5 BTC to 6.25 BTC at a price of 88.21. And then now here we are. Bam. Just hours away to block 840,000. 41 blocks remaining at a current price of 64,480. So just looking at the price, right? 12 to 650. Let's see what's that. I'll do like a 650 divided by 12. That's a 55x, and then this is like, I don't know, 12.
Oh my gosh, it was $12. I didn't see that on the screen a second ago.
Yeah. Oh, you were just saying $12 from memory?
Yes, it really was $12. It really was. That's what I sold it for. I'm ashamed.
Yeah.
I'm ashamed.
It's crazy, right? So, and then so we jumped from 650 to 88, like that's 10 to 15, and then
wow.
another 8x here, at least at the current moment. And so there's your, speaking of the Halvening, like there's our little history and our run up from the beginning. And so I guess, well, let's segue back because it sounds like you go back further in time to tell me about what's your own Genesis origin story as far as Bitcoin.
Okay, so a good friend of mine, he's a doctor, and he was teaching me assembly, and I was very interested in electronics from a very, very young age. I was building computers in middle school and selling them and doing things like that. And I was very interested in programming. I had, this was back when tech ed labs were popular, and you could, you worked on like actual CAD machines and things like that. I've been in and out of the educational system since then, and they don't really cover electronics in that way anymore. It's more focused on web programming, which is kind of sad, but I digress. As my friend introduced me into Bitcoin, I was like, well, what's so special about this? And he summed it up like this. He's like, well, like Napster, right? And I'm like, yeah. And he said, well, basically, it's like Napster, but there's just one file. And I was like, what do you mean there's just one file? And he goes, well, there's just one file called a ledger, and it stores everyone's balance. And it uses like the peer-to-peer to keep that up to date with everybody. And I said, well, what's to keep me from like uploading it or corrupting it or something like that, and then getting everybody to share the new updates with my $1 million balance? And he said, well, that's where this mining thing comes in. See, the only ones authorized to actually add on to that are miners, and they have to produce a block by verifying a hash. And I said, yeah, well, I could do that. I mean, anybody could do that. And he said, well, the trick is this thing called difficulty. I said, difficulty? What do you mean? And he said, well, it's the time it takes to produce a block, and whoever produces it first, it shares that and updates like all the Napster-like clients with this new ledger that has the extra block added to it. And I said, okay, well, that's interesting. So how hard is it? And he said, well, as soon as you can do it, you'd have to all the other validators would verify that didn't have any erroneous information in it. And as he continued to explain it to me, I had that light bulb moment go off. I was like, okay, so this isn't like a game coin. I thought it was like when I first heard of Bitcoin, I thought it was Mario, like that was the idea that I had in my head. It was like some sort of like video game, but text-based. And after he explained it to me, I had my own light bulb moment, and I just sit there, and it just like a mind virus. It just ran into my head. I'm like, there's got to be a way to break this. And I just kept running it over and over and over and over.
Like,
and eventually,
it can't be.
Oh yeah, eventually, like I got bit by the bug. I was like, oh my God, nothing like this has ever existed before. That feeling you get when you have a true revelation, and you're just so excited that you can't sleep at night, and you get back up and look at it and you're like, well, I guess this is what I'm messing with for the rest of my life. I mean, it totally took me over from that point on.
Yeah, it's really interesting to hear all the different stories from people, like their, like somebody's take on it, like the description that you just shared about your friend, right? I've never heard one like that before, but like, there's so many interesting angles that people can come up with the way they describe this. That's why, to me, like after 11 years, I still wake up every day and see this, like, just like I see it a little more brilliantly than the day before. It's a little more interesting than the day before. I have a little bit more appreciation than the day before, and that's never
right.
Every day I wake up and see like a new way of seeing Bitcoin, in a special way. So, yeah, that's so. And what year was that you're talking about now?
Oh my gosh, maybe 2010.
Okay. All right.
Yeah, it was worthless. The Bitcoin, I was, asking what the price of a Bitcoin wasn't even in my head. It wasn't even on my radar. I was just like, this is so cool. This is so awesome. I never thought it would be something that could become a worldwide sensation and like be worth a lot of money. I didn't think about the evaluation prospect of it. I was still pretty naive at the time, to be honest. I wasn't really into speculative markets. I was into baseball cards, I was into some collectible markets, which are more akin to NFTs and things like that. But when I heard Vitalik talk for the first time, I got kind of excited about Ethereum because Satoshi actually wrote smart contract ability and things like that in Bitcoin and then took it out. He said it was just too much work, too risky. It's hard enough just to get Bitcoin out the door. And so Vitalik kind of picked up that torch and then helped create Ethereum from that.
Yeah. So did you have a gap in there then? So you discovered this 2010, you messed around with it, you thought about it a lot. Did you put it down and have a gap in time?
Not really. I was pretty heavy into mining. At my peak mining, I had like 30 servers running in my house, like fans everywhere. I mean, yeah, my wife was very concerned. we didn't run the heater all winter, you know. It was one of those kind of things. All the houses had snow on them. Ours was just totally toasty. Everybody was. Yeah. Oh, yeah. You know, people commented in the neighborhood. They're like, "Why are your windows open all winter long? You're just wasting the electricity." And awesome. Yeah, I got kind of manic with it. They were running under the bed. They were running in the closet. They were running in the garage.
Oh, wow. So well, you must have mined some pretty good Bitcoins then.
I did, and I moved it all to Ethereum. You know, once Ethereum started taking off, but I had a bitter year in Ethereum. When Ethereum first started, they needed a logo, and I was in the logo contest. And so I drew them a logo. I thought about it a lot. I really liked it. And then after the contest was like wrapping up, Vitalik was like, I really want a pyramid on it. And I'm like, no, you don't want a pyramid. That's like pyramid schemes. That's bad and stuff, And so like he only even really considered, he didn't even look at my entry. There was only like 12 entries. There wasn't very many. Yeah, there wasn't very many people drawing up logos for Ethereum. And so the one that won was literally just a pyramid. Then they turned it into the diamond-looking thing. Yeah, and so
well, they should have sent everybody some ETH as a consolation prize, even for all participants.
Right? They should have said anything, but I got really mad. I took it very personal, and I sold all my ETH, and I got out of it, and I wanted nothing to do with it. And then like a year later, I looked at the state of smart contracts and what they had achieved, and I was like, actually, they managed to pull off a lot of things that they said that they were going to be able to do, and I was very thoroughly impressed. And if you look at all the other projects out there, Ethereum has evolved and grown the most. Most projects launch, and they're static. That's just what they are. But if you look at Ethereum, it's so different from when it first launched.
It's amazing. Yep. EVM compatibility, so on, developer count.
Mm-hmm. Uptime alone is impressive. It has the most insane uptime.
Yeah. Well, let me. What's a great backstory. I don't know if I've ever shared mine with you before, but I know you told me all that before, but I actually forgot how far back in time you go. You're like mega OG. Well, I was on a plane, October 2013. I was taking a plane back home, and one thing I would do at the time was I would always grab a Wall Street Journal, and that was my time to just use that on the plane and in the waiting room, stuff like that. That's when I would buy it. So of course that particular day, that was the day that the infamous Silk Road bust went down, and was the FBI bust of Ross Ulbricht and the whole backstory and everything. So that was like a breaking story in that particular paper that day that I bought on the way back.
Oh, wow.
And so that was October 2013. It did, and I mean Bitcoin was mentioned because that was the currency of the platform, but it was kind of tangential to the story. So it wasn't until somewhere about the end of December or the first week in January, somewhere in there, I don't remember the exact date, but basically a friend of mine said, "Hey, have you heard about Bitcoin? I want to ask you for some advice. My husband and I want to invest $1,000 in a computer so we can mine some Bitcoin." And I was like, yeah, I've heard of it. But, what I was thinking is, my highly skeptical wheel started turning. And what I was thinking is, you don't know what you're talking about. You better go get your facts straight. That's how I go with it. My highly skeptical mind. And of course, as it turned out, I was the one who didn't know what he was talking about. And I was like, well, I don't know anything, but I'll get back to you. So basically, I went and started going down the rabbit hole, and I'm starting a book. And I spent 2 years writing the Ultimate Bitcoin Business Guide, and which is actually right there in 2014 and 2015. So it was like, I started undertaking this. I look back on it now. I'm like, wow, that was a really monumental undertaking. Like going around telling people you're writing a book, you didn't even know on anything. I was learning on the fly. But
Yeah.
it was kind of like a self-guided master's degree or whatever, just because I would never have done a deep dive in that way if it wasn't a combination of my curiosity plus like taking on a project like that. So anyway, my answer to her question was, I'll get back to you about whether to buy whether to spend your money on a miner and so forth. And so my book was my answer to her question. And that's how I ended up started going down the rabbit hole. And then, here she wrote, right now we're in 2024. So it's been a wild ride, to say the least.
It has. It really has been a wild ride.
And so on that note, one of the things is I've never been enamored by talking about price. Price is like, I think any market anywhere about anything, people talk about price. That's what people's eyes glaze over. Price, obviously equating to profit in there somewhere. And sometimes that's all people care about. They just care about profit. Just show me where the money is. That's it. Show me the money. And that's the end of it, without like any conviction behind the asset. And I get there's also a thing about not having too much of your emotions wrapped up, because that can twist you up from being a successful investor and stuff like that. But anyway, like I remember borrowing a tweet, I believe it was Once Upon a Time, that I saw where somebody said something like, hey, price is the least interesting thing about Bitcoin. And I thought about that. I was like, yeah, that's really interesting. I think I'm going to borrow that. So I've kind of felt
that's a good one,
right? I kind of felt the same way, because my conviction and passion about Bitcoin is the price is simply a bonus, if you will.
Yeah.
Over time, because I like everything else so much about it. So, yeah. So, but I mean, now it's kind of hard not to even talk about that or with supply, because all those different things are all kind of intertwined. So anyway, what I wanted to bring up was, that we have a 21 million coin total supply, algorithmically programmed monetary supply that's very predictable. We know exactly what it is, as opposed to our, closed door, good old boy central banking, behind the scenes, non-transparent decision making that we have, artificially propping up markets and so on and so on. We don't have to go. We can or don't have to go down that rabbit hole over much we want. But it's like it's a night and day difference here between old model and new model. And the fact that you got these 21 million coins, we know that they're going to be mined by. They would all be mined by 2140 and so on. You can see a schedule, right? You say there's a graph. And so what I'm realizing over time now is that 21 million, it's like that number is actually becoming smaller and smaller over time. And of course, actually, you look at a lot of projects that are out there. If you looked at the hundreds of thousands of digital assets, blockchain projects and whatnot, and tokens, you see that many of them have, like a billion or higher. Sometimes multi-billion. Of course, meme coins are in the trillions, but I'd say it's very common to have a project's got a billion tokens, and it's very uncommon to see one that has just in the million, in the hundreds of millions. That's somewhat, I think, that's more infrequent. And of course, then you look at like a bit. I mean, there are some projects that have the tokens that are less than 21 million, but I wouldn't even say they're in the blue chip category or anything like that. So I think basically the point here is the BTC and is a rare company as far as the supply. And the more you look at the number, to me, the smaller it gets. And so let me tell you what I mean by that, because I love to have your thoughts on it. So I know, as you know, the analysis would suggest that there's the likelihood that we've got 3.7, let's say approximately 4 million. I've seen the number 3.7 lost.
Yeah.
In other words, people screwed up and they lost their seed phrase or private keys or whatever. And then that means, since that's the root of your Bitcoin, that is what it is, then you've lost your tokens forever. You can't access it. There's nobody to call, right?
When you're
Yeah, go ahead.
I can relate to that, because I've lost some coins. I've lost quite a bit of coins.
Well, there you go.
The most coins I've ever lost And I know this is what's happened to a lot of other people with Bitcoin, Litecoin, and things like that, because I've been a Litecoin miner. I was even a Dogecoin miner. And Dogecoin was the silliest meme coin ever in my mind, because they took the mining algorithm that Litecoin and Bitcoin were using, and at the time the developer had changed the payout to just a random number. So your Coinbase block, remember me telling you that in the blocks that are generated, you have a Coinbase transaction where new coins are minted out of thin air. And it's also adds in all of your fees from the previous block, right? Well, they had just stuck in a random number generator right there. So whoever solved the block got a random number of tokens. So I was mining Dogecoin. Oh yeah, and I was mining Dogecoin, and I got very little coins. I kept getting unlucky. I kept mining blocks. I mined block after block after block. I've literally mined countless Dogecoin blocks. I have like 1 million Doge. I thought it was stupid, so I just deleted my wallet.
Really?
They're still there somewhere. I never sold them. They're just gone. I mean,
that would have been nice when the price hit like 30 cents a couple years back there.
Oh gosh, yeah. It was like one. I still kind of remember the number, which is weird. It was like 1,132,000 or something like that. It was some weird number, and I was just like, and seeing with all the decimal point and all those 18 zeros after it or whatever it was, I was just like, that's just the most unusably weird number ever, and I just walked away from it.
Well, yeah, it's interesting because like you're talking about like and going back into the early days when you were also sharing about the 50 BTC. In those days, there was no market. I mean, eventually like $12, that was the beginning of having a.
It wasn't worth your time to sell.
Yeah, where there was at least some market around it emerging, but still, I mean, you had a point in time where there was like, okay, what do we do with it? It's kind of like, you're just experimenting. So the thing is that, you had a lot more carelessness then. In other words, when you didn't have value, you didn't have the urgency to say, oh man, you got to be real serious about protecting this, right? That's the marrow of this whole thing is, self-custody and where you got responsibility and control. So, it's kind of like that's just natural human behavior that the more you got at stake, the more you step up your game to protect it, right? Because if somebody said, here's a piece of paper with some words on it, or some characters, and that represents $5 million. If I told you there was $5 million on it and you didn't know anything about anything, you would figure out how to safeguard that, right? But if you didn't think of any value, then you may just be careless and it gets lost. So it makes sense that certainly in the early days, especially when the rewards were higher, that you had a lot of these, 50 BTC rewards and so on, that, when it was cranking out rewards, that, a lot of that stuff got lost to the tune and the accumulation of what appears to be, because we don't know for sure. Nobody really knows this. You can only speculate based on analysis that coins haven't moved in such a long time that you could draw the conclusion and say there's a probability that these are likely lost forever. So let's just say now we got out of 21 million, now we got 3.7 to 4 million coins. And you may lost, lose them, but I'd say it's going to be less likely now when you got this much money on the line. It's going to be less likely, but could still happen. So we got 4 million out of the equation right there to the lost coins. Then we got Satoshi's stash of another 1.1 million or whatever that is, and that's 5 million, right? And then we've got and then we got
and then you have errors. On top of all that, you have errors from these exchanges, because when you have something like Mt. Gox or a bridge that has just oodles and noodles of Bitcoin, it's really easy for that to get stuck or get lost. There was recently Binance, I think, sent 90,000 Bitcoin to Coinbase on accident. And they had to ask for them to send it back, please. And they did. Wow. And so things like that. I may be misquoting the direction of that. It may have been Coinbase to Binance, but
I see. I'm pretty sure. What you're saying is even you're talking about at a high, like institutional level transfer, that there could be big mistakes that could still be made. Yeah,
right, because you're no longer just an individual. An individual seems to have more rigidity than an institution, because an institution can be following, protocols and procedures, but who is it that's actually pushing the button? Is it a new employee?
All you need is one weakness, one Achilles heel in your process somewhere, one
Right.
vulnerability. That's all you need.
Right.
The tolerance level. As you know, the tolerance level for mistakes in crypto is it's a very
Zero.
very small zero. Yeah, you can't make any mistakes. So, well, anyway, so yeah, there you go. I mean, we're talking 5 million coins out of 21. Then if you have another, what I just saw recently was there was actually last night I came across this, talked about another 12 million coins in the hands of retail. And then I want to share another screenshot here in a minute, but showing about what the cold storage is like right now, right there, because this is what's great about the transparency of blockchain. The amount of information that you can distill from these blockchains, to me, it's just mind blowing. Still on a daily basis, the fact that you can know how many coins have moved and when's the last time they moved, and then you can say, all right, well, we know that 70% of Bitcoin hasn't moved in over a year, and so on and so on. What you know that means people are holding it tight and they're not giving it up, right? So you got all that stuff, and then you got MicroStrategy that is obviously Michael Saylor, I think former CEO now, but founder of MicroStrategy and the largest institutional play currently right now. He's a breath of fresh air, by the way. I think everybody loves Michael Saylor, but talk about it. He's probably maybe the best evangelist right now. It's just amazing. But so MicroStrategy as a publicly traded company has been accumulating Bitcoin nonstop to the what I saw was the most recent one as of March was like 212,000 or somewhere in there. All right.
Wow.
Talking about depends what date you're talking, what moment in time you're talking about, how much, but 14 billion, let's say. But that's 1%. Okay. So
wow.
Still adding to this. He's got 1%. So this is what really blows me away when I think about all the things we're talking about here. And then MicroStrategy's got 1%. Of course, Michael's got his own stash. But dude, that means there's only 99 other percent left.
Right.
That's it. And it's like, that's it. There's only 99 other slots.
Right. And if he's got 1% of 21 million, and you take away all of those others that we've talked about that are lost, I mean, there's probably over 5 million Bitcoin lost. Right. His percentage goes up considerably.
That's
even after that. And I think he has the right mindset, on the horizon. He won't ever need to sell his Bitcoin.
No.
He will be able to use it directly for the value of it.
Right. Well, you know what the response is. Like, when are you going to sell? He says,
yeah,
I'm not selling Bitcoin in 100 years.
That's awesome.
That's
true believer.
Yeah. That's like the definition of conviction right there. So,
well, and historically, if you look at fiat, that's what everybody talks about, selling down to fiat. That's kind of a poor mindset, because if you ever have held $1 million in USD and just watched 10% of it go away every other year, you're sitting there thinking, like, why am I holding on to it? It's not doing me any good.
Well, that's another one of my favorite quotes by Michael Saylor, which is, yes, USD is like a 500-pound block of ice just melting away.
I haven't
about their treasury or whatever.
I haven't heard that. It's like, that is so true, though. I mean, your value is constantly being removed when you hold large amounts of fiat. I remember J.P. Morgan had a quote that was similar. He said, holding fiat, holding dollars is holding debt. And you don't want to hang on to that. You want to hold on to things that grow in value, not shrink. And as long as people are always trying to accumulate Bitcoin, you have to think of that 12 million in retail that you were talking about earlier. There's going to be people pass away, lose their keys, things are going to happen, or they're just going to sit on it because they don't need it at the moment. Whatever the reason is.
That's right.
The scarcity is going up faster than Bitcoin can inflate. And that's the thing that nobody talks about. Bitcoin has inflation. It has active inflation that is going on all the time. When you talk about 12 Bitcoin every 10 minutes, that adds up pretty quick. That's hundreds of Bitcoin. That's thousands of Bitcoin that are just coming into existence. And when their valuation is so high, that's a lot of money just popping in the air, and it's a ton of sell pressure. It's going to be very interesting in the next 6 hours when the halving kicks in. The mentality of people starts changing when they see the price evaluations adjusting.
Yeah,
it's going to be dramatic, I believe. There may be a little dump before, but after that, it's going to be very dramatic.
Right. Yeah, and I was just thinking, I don't know, I'm not sure what the numbers are like in the aggregate for the of course we just had the first Bitcoin ETF in the United States approved a couple months ago now, but I'm not sure what the aggregate Bitcoin inflows are on that. What I found interesting was that I found interesting, and there was a couple articles where they talked about there was net outflows that were happening. That kind of baffled me, but I don't know what the net inflows are. I just it's not coming to me right now. But again, you think about like, okay, how many percent are the ETFs going to end up with? I don't know, 5%, 10%. Now wait to think about this. There's a few other corporates, publicly traded companies, and in the let's say that tier, but there's none of them, I don't think, that are investing anywhere near at the pace that MicroStrategy is, right? So, but the point is, wait, what if you have just a few more of those come online? All right.
Oh,
so
yeah.
You have 10 more publicly traded corporations that get hot to trot in the same way. Well, that's 10%. What about if all these nation states start kind of stashing away some of this in their treasury?
Right.
And that's another whatever percent. So that's all I'm saying. You keep looking at it, man. It's like the more you think about it, the smaller and smaller it gets.
Oh yeah, it gets crazy small. And when you're thinking about all this, remember, a lot of these nation states that are going to hold on to Bitcoin, they're going to hold on to it, and then they're going to do the same thing. They're going to wait for the next nation state to grab on. And once they do, there's this interesting dynamic between FUD, fear, and greed. And when you look at the bottom of charts, that's when people get really scared and they think it's going lower. And when it goes up high, they get greedy. These things are like yin and yang, polar opposites of each other.
Absolutely.
And people like MicroStrategy win in the long run because they hold with an iron death grip and they don't let go. Because when the price surges and it's going to dip afterwards, it's so hard not to sell and to hang on to that. That's kind of why we created our own token with Sync Network, was because these wild swings in crypto make it extremely hard to hold on to. When Bitcoin was for $12 and it went up to 30, a lot of people were losing their minds. They were like, "Oh, it's so overpriced now. What's going on?" And then when it crashed back down to $3 from 30, it went at 90% down. People were just like, "It's dead. Put it in the obituary. It's gone." And how many times have we seen that over and over and over?
Well,
Bitcoin is dead.
Yeah, you know what? Speaking of that, let me share one more thing here, because this ties into just what you're talking about here. And then I'd like to jump in, and if you want to talk about Sync, I'd love to hear more about that. So here's a blog that I made, right? And so this is actually, I thought I had titled it. It says Bitcoin by 2030, is Bitcoin worth investing? I thought I titled it why most people will miss $1.48 million Bitcoin by 2030. That's what I thought I titled it at one point in time. But looking at it here, that's what I got. That's what I should rename it to. Okay, I do say it right here, I guess, in the H2 header. 3 reasons why you're going to miss Bitcoin reaching a 1.48 million in 2030. So this is largely coming from ARK Invest's annual report that's called the Big Ideas Report that they put out around January every year. Okay, so the 2024 version just came out, although this article at the time was based on 2023. However, it's essentially the 2024 section on Bitcoin is reiterating everything that's in here. So that's the thing about what I've noticed about Cathie Wood, is that they have every message that they've had about Bitcoin has been extremely consistent. And they have been long on Bitcoin for many years now. What I like about her is she's got a very, very long history in legacy finance. And so, although I think a lot of people who don't get Bitcoin in legacy finance they just don't understand it because of their paradigm. But in this particular case, I give a lot of credibility to her because she's been in and had a very long and colorful and successful career. In financial markets. So that's why, I really give a lot of credit here and a lot of weight to this report. So let's just go down a couple things real quick, right? Is like some of these, you got to look at this too, because if you look at this, and what's interesting is they don't, here's the stuff that they focus on. Some of the stuff I never even heard of, right? It's not, and it's not just being long on Bitcoin. It's not like, oh, we're just a Bitcoin fan. All these different things: orbital aerospace, autonomous ride hail, modular diagnostics. Like some of this stuff I never heard of, right? Autonomous logistics, as far as it being like a massive breakthrough, industry or area. But anyway.
Oh yeah, that makes sense.
Down here's your thing right here, right? That's what you were just talking about drawdown. So the drawdown from Bitcoin's all-time high was the 5th largest and 2nd longest in history. I guess they're maybe talking about the last one, but if you could see this, I don't know if I can expand this or not, but anyway, so you'll see here. So June 11th, June 2011, the peak price was $31, almost $32. The trough was November 2011. A few months later, the trough was at $2, which I think was what you were talking about. And so the drawdown there was 93.7%. Right. Then November 2013, which is where I came along, which was the high price, $12.42. And then now it's saying January 2015, it went down to $152. So that was a drawdown of 87.7%. And then, of course, we know there was the other the bull market that was in late 2017. That's when Bitcoin hit a high at that time, 19,891, based on this. And then just by the following December, the price went down to 31.28. So from almost 20,000 to 31.28. That's an 84% drawdown. And then our most recent bull run, November 21, it was 69,000, the all-time high. And then just a year later, November of 22, it went down to 15,797. That's a 77% drawdown. So you've had these massive drawdowns like this. And of course, what does that mean? It translates into this volatility, risky narrative in the mainstream media. And then you get where Bitcoin gets more negative press than it does positive press. And of course, that's why you have, I'd still say, a lot of negative, a lot of naysayers in the space and so on and so on. So let's move on down to this one. This is what I say. Bitcoin's high returns are hidden in plain sight, right? Because if you looked at that, you'd be like, oh, I don't want to invest in that. That's too volatile. It's too risky. And I don't understand it. And how does it have value? And blah, 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 blah. All the stuff that people say. So if you look at this here, in this particular chart, what it's looking at is, and right here, you see the small chart. Okay, it might be too small to actually see, but I can see it. Yeah.
Okay.
So basically, it's talking about a 3-year average return, and 3-year, 4-year, and 5-year. All right, and then it's looking at the asset classes of global equities, global debt, gold, and Bitcoin. All right, so let's see here. You got 2022, 2022, and 22. Okay, so just trying to figure out what's the best column to read this in here.
Versus the 3-year, versus the 4-year, and versus the 5-year.
Yeah. So I mean, let's just take. Let's just look at the average column anyway. So, like, say for the 3-year return is for global equities 10.6%. Right. I guess it means up to the 3 years running up to 22. I'm not really sure.
Right.
Dig into the finer points of it here. So then you got global debt 15, or no, I'm sorry. Is that 15 or 1.5? 1.5, I believe. And then gold 2.4. And of course, Bitcoin 152%. All right. Now 4-year, you got global equities again at 10%. Global debt at 1.5%, and gold. It's almost the same thing over again. The 4-year hours, and then Bitcoin 187% over 4 years. And 5 years,
it's better on all time frames.
I mean, it's not just better; it's stratospherically better. It's insane. So that's why I'm saying that the gains are hidden in plain sight because it's buried within the volatility narrative, and so on and so on and so on. So
Yes.
here's the thing I was talking about earlier. This is where it talks about the BTC. The supply of BTC last moved greater than 1 year ago is now 66%, which is 2/3.
Oh wow, yeah.
Long-term holder supply, they're using another way to measure that because it's a slightly different number, but you get it, right? So that's the whole thing. So on top of everything else that we said about just looking at MicroStrategy 1% and how small, like as soon as if you have other 1% players coming to the same game, all of a sudden there's only a little bit left. And then the question is, what's actually going to be available? You got the supply, but what's actually available for supply that's going to be circulating supply that's going to be for sale on the market?
That's right. You run into a fire sale situation because there's no supply available left. The markets are empty. And some of the interesting things to look at when thinking about these is to look at the supply available on centralized exchanges, because that's where most people are going to be buying and purchasing their Bitcoin from. And you can look at them as holders as well through things like Glassnode. And when you look at them, they're not majority holders of anything. So if the only way they're going to get more Bitcoin is if somebody brings them Bitcoin to sell. But otherwise, anybody who's going to be buying up the Bitcoin, they're going to have to fight everyone else for it.
That's right. Exactly. It's going to be, it's what you could call, I'm sure you've heard the term hyper Bitcoinization, when it just all of a sudden explodes. Stratospherically explodes.
Right. We're in the middle. We're smack dab in the middle of a 2-year upswing.
Right. So this is, if I continue on, this is where you can say, well, where does that number come from? Right. That's the whole thing here. Where does the number come from that's in this report? How are they deriving that number? So let me just move on down here. And then, so this is, Bitcoin is likely to scale into a multi-trillion-dollar market. Of course, we're at like $2.4 trillion right now. Bitcoin holding just more than half of that. And so it's like, okay, so this is where they would use, like, because you say, well, how do you value this thing, right? And so this is where it says Bitcoin's use case. They've got 8 categories that they say it could make inroads on, right? So corporate treasury, remittances, nation state treasuries, emerging market currency, economic settlement network, the global settlement network. Essentially, that's what it is. We don't even have that. All we have is a fractured patchwork mess and legacy banking. And then we got seizure resistant asset, institutional investments, and then digital gold. Of course, digital gold has been the whole narrative. Of course, they're saying, and then you got penetration rates. Okay, so those are the main areas where you are going to have, traction. And the question is, to what degree are you going to have? So the penetration rate is a bear, a base, and a bull case, right? Just start with gold, because we know that's one of the big Bitcoin narratives is that Bitcoin's digital gold and so on. So the bear case is 20%, base 40, and then bull case is 50%. So, and then you've got the other biggest one on here is remittances. Of course, we know that's probably approaching $1 trillion market there, which simply means money that's sent back overseas to another country. Typically, think about the families living in this country, they send it back. Like that's remittances. So that's 25% there as a bull case. Emerging market currency 10, economic settlement network 10, etc. So you can see all those, when you got all those penetrations, that's how the Bitcoin market cap and the price could swell. And then if you go over here and just look at these columns, so all this stuff on the right is translating into these color-coded columns. Just look, here's the thing that blows me away. Look at the bear case, 2030.
It's still $250 million.
And then that's insane. It's 258,500 is a bear case. 1.4 million.
Now that's what I call bullish.
Yeah,
they're like the worst case scenario is better than $250,000. Right. Worst case scenario.
Right. Like I said, if you look at the report for 24, I'm sure you're going to see similar stuff. Like I said, the narrative from ARK Invest and Kathy Wood has been very consistent over time. And so that's why I just wanted to share that. So that's a great map. Right. I think most people are going to miss, as I said, they're going to miss it because there's so much other noise going on around this. For some reason, it just clouds people's ability to figure out what's going on here.
Well, we're creatures that live on 30-day paycheck to paycheck type time horizons. And it's like the theory of evolution and all these other things. It's almost impossible for a normal person to wrap their mind around because they don't think in terms of timescales that long. It's really, it's really hard for people to see past the 30-day time horizon. Otherwise we would have people who are a lot better at, taking care of their health, taking care of their finances, and all these other things. People who get nickeled and dimed to death from microtransactions, they don't notice that they're paying $10 a month to Netflix and $10 a month for Hulu, which is basically the exact same thing. And then they wind up watching maybe neither all month long.
Right.
Because they're too busy working, trying to pay for those Netflix and Hulu subscriptions. And that's the ironic thing about it, right? Right now, people are all dying a death of 1,000 cuts. They're just being nickeled and dimed to death, and nobody can see the tsunami that's coming. All they can see is that the water's going out from the shore. They're like, "Where's the ocean? It's gone. We better go closer to it and see if we can find it." And they're gonna drown. They never see it coming.
Yeah, that's a great color commentary there. Well, why don't you tell me about your projects and some of the stuff you're up to?
All right. Yeah, I'd love to. We founded Sync Network kind of on some of these guiding principles that time horizons are really hard and difficult for people to manage and see, and they can beat the game by playing the long game. And so we created the first financial NFT. We didn't even have that name for it back then. We created this NFT that allowed you to lock liquidity into Uniswap. And people were very confused on what is an NFT, what is liquidity in Uniswap, what do all these words mean? But basically, it gave people the access to put a little bit of money into Uniswap. And as other people speculated on the tokens trading back and forth, they would earn liquidity fees. They were always fudded out by people saying, "Oh, you'll get impermanent loss and it's difficult to understand." And so they were afraid of putting their money in and losing it, which they would have if they just put in, $10 and then watched it trade down to zero and then pull it out at zero because they're like, it lost, I'm pulling it out. Whereas if they had left it in there for a year, it would have been worth $100. Because as it grew and shrank and grew and shrank and grew and shrank, it snowballs and gets bigger because it has auto compounding rate of returns. It's a really wonderful product in that regard. It works today just as well as it did back 3 or 4 years ago when we launched it. I'm extremely bullish on it still. I think that as Ethereum gets its fees wrangled in and under control, they've been a really good partner. We've launched it on Ethereum. It's an Ethereum-based token. And having that really good network, that reliable network as a base, has paid off in spades. Back when we launched Ethereum was like $165 when we launched the Sync token.
That's amazing.
And
not that long ago.
It was not that long ago, right? And Ethereum, people are complaining about, they're like, "Oh, why aren't you doing something?" That's the kind of times that you want to be looking at getting into something. When everybody else is sick and tired of it, they're capitulating and fudding out. But for all those people who are emotional like that, and most of us, let's say all of us are, because we're emotional creatures, when we experience pain, we withdraw from that pain. We try to get away from it, even if it doesn't make sense. Mm-hmm. And, in the case of this, the Sync Network product, we allow people to lock up into crypto bonds, and we reward them with a high rate of inflation. And because of that, people look at our project and they take one glance at it and they say, "This project must be inflating to the moon." And the truth is if you actually look at our total supply, our actual supply of tokens has gone down ever since our initial token generation event. It has just gone down and down and down because as more people lock into crypto bonds, we actually burn their tokens while they're being held so that they don't count as part of the total supply. Mm-hmm. And that actually drives our market cap down. If anything, it's made us more of a sleeper token people don't see us going up the market cap chart, so they assume we're not doing good. But in reality, if you create crypto bonds, and that's something that thankfully I've had a lot of warm praise from people. They sent me DMs. They said, my entire portfolio got totally destroyed except for the crypto bonds that I made. Saved my hind end. And
right, because it's important to say also, as one of the value propositions is that you're
locked.
You're locking your assets up.
Right.
Smart contracts, so you can't take that even if you want to.
That's right. It's a hard lock, and when you commit to it, you're committed to the full duration of it. And so by doing that, we're taking a huge amount of sync tokens off of the total supply and out of circulation. And so the amount of tokens shrinks. So we get this heavy deflationary aspect of it. But at the same time, for all the people who are speculating, they refuse to make crypto bonds. I've seen a lot of people do this too. They want to just trade the token on a day-to-day basis because they think they're smarter than everybody else. And I know one trader who has made over $100,000 in trading sync tokens back and forth on a yearly basis.
Wow.
Blows my mind. Maybe he is smarter than everybody. But for the rest of us people who can't do that, we can make really good returns on just locking up into crypto bonds. And so you can either go and try to trade against that guy, or you can lock up into a crypto bond and have a lot higher likelihood chance of success. And a success is defined as reaching a worthy goal. And if your goal is to increase the value of your holdings over time, there's no better way than to make a crypto bond, because the plan is laid out before you. You can set your time horizon. Okay, I'm not going to look at this for a year. You lock it up for a year and you just walk away. You don't have to sweat about it.
Yeah, that's right. We actually were, since I'm usually I'm a fan of long positions.
Yeah.
I'm long crypto, long Bitcoin, like capital letters long. But, so of course we did several of the crypto bonds, and actually did a 3-year, which is the maximum lock, and then just kind of found out. As a matter of fact, I think the 3-year period has just expired last month and this month. It's time to go check it out.
Isn't that wild?
It is wild. And then of course the thing is, what I realized in revisiting that, because the time period was coming around, and I realized, I was like, oh man, you know what? In the bear market, that was the time to have continued to create more and more of those things.
Right, when the gas fees are low.
Well, the gas fees are low, but then when the token price is low, and then it's just a matter of leveraging the percentage of the bond based on the time period, and so you could have these massive returns,
right?
When you come out of it again, and then if the market's high, I mean, you know what I'm saying? So it's like, it's crazy how I didn't put it together. I wasn't thinking.
Right. I mean, we all do that, because that's the problem with long time horizons. You don't just wake up one day and go, it's been 3 years, it's time to go look at it. None of us do that. But then
the other thing you should highlight is the artwork that's on these bonds is phenomenal, over the top artwork.
And thank you.
The interesting thing is you burn the artwork in the process of redeeming the bond, right? So my intention is to take some of those, and you know how you can get photographs and you just get it put on like it's like a canvas type of thing.
We actually have integrated with Pop Canvas, and so when you go to your crypto bond, there is a print link where you can order an actual wall poster of it on Canvas.
Nice.
Yes, and we've had several orders come through. Yeah, several people have ordered theirs as a memento, and I personally think that after you've held onto one for 3 years, if you're like me, you look at it, and I can't really bring myself to part with it, because I know that the next one I'll get won't look like it, and I'm just sitting there thinking, I'm like, every crypto bond has been unique so far, and there's never been a duplicate, and that there's so many combinations that still haven't been seen yet.
Do you have one you can put your finger on real quick to share?
Unfortunately, no. I have all my browser tabs closed.
Okay, gotcha.
Let me go to our app, because on our app we do have a live feed. So every time someone creates one, it shows up in the live feed. And oh, and then there's the lucky ones. The lucky ones always look really good. Because if you get a lucky bond, one that ends with an ID of 777, it gets special artwork and a bonus rate.
Oh, okay. Interesting. Yeah. Yeah, like I said, the artwork on those is phenomenal. The coloring, the of course, if you like the old school certificate style, like around the edges and that kind of thing, you've incorporated kind of the legacy feel of certificates and so on.
Yeah, there's kind of an homage there. There's definitely kind of an homage. See if I can find. I know I'm looking for one in particular. Yeah, but I don't have it bookmarked in front of me.
Like you had Tesla and was one Tesla in there. All right, there's like a centerpiece in the middle of the artwork. The Tesla and then some various other things as well.
Oh yeah, here's a Tesla one that I really like. I like it even better than the lucky one. Are you able to screen share that? I sent you a link to it in the chat. Hey Jackie, what do he's in the chat asking a question. What do you think about the Perspective L1 Ethereum? Oh, I'm very bullish on Ethereum. I'm extremely bullish on both Sync and Ethereum. Are you able to share that one?
Yeah. Let me see here. Oh, there we go. Beautiful. All right, let me share that real quick. Screen crypto bond details. Yeah, look at this. Beautiful artwork. It's amazing. Oh yeah, lucky. Yeah, that's cool.
Yeah, that's the lucky one. Pull up the Tesla one. That's the next one, the 2063.
Let's see here. And let's go to the next one.
And it's an example of just a common one.
Let's see if that's it. Yep, there we go. Yeah, Tesla. There you go.
It shows you the amount of sync that is accruing in real time in the bottom right-hand corner. And if you scroll on down, you can see where there is a order physical copy button in the bottom right.
Where? Oh yeah, there it is. Cool. Awesome.
Yep.
Right there. So you get all the details. Well, it looks like this has been made dynamic. Like I don't remember the the numbers accruing.
That's right. We added the numbers accruing. We released the dynamic crypto bonds a few months ago. It wasn't too long ago. We posted an update on Twitter. It was kind of before the bigger run up and people started getting hyped up. So things were still relatively quiet. And a lot of meme coins were popping up and being launched at that time. So it was just a real challenge to get that news out to everybody. People like Jackie heard about it. I know that he was around. We still have several active community members who will chat with me on a semi-regular basis.
Yeah,
and we see trading. We still see a lot of trading activity. Other coins compared to us don't have nearly the Uniswap volume that we have.
Really? Amazing.
Yeah. I remember seeing some days where we were getting up into $100,000 of trading volume in a day. A couple weeks ago. I haven't looked in a while, to be honest.
Yeah, but like
I've been working on.
Yeah, it's like super cool here. Like where you also have the token symbols. Like there's ETH on the left, and then
right. Yeah. And depending on what you lock up, it shows the different symbols up in the top left and right. Get a different kind of a. So we have scenery, whichever scene they're in, and this is in the hacker layer scene. And in the background on the monitor, you can actually see the same Solidity code from the crypto bond contract on the monitor.
Right back.
Yeah, that's.
I guess. Yeah.
Yeah, that's the actual Solidity that's in the actual scenery there. I think that's why I really like that scene. I think it's really cool.
Yeah, like I said, I don't know what I was saying. I guess it was like, I didn't fully wrap my head around the power of how you could use this. And so in those middle years, I was like, oh, well, that was actually the real major opportunity there. And the bear market was an opportunity to just continue to create bonds. And so
right.
I did, but now I'm excited again
Yeah. Oh man, these dynamic crypto bonds are awesome. We've updated our DApp. The DApp has been more focused. So we originally supported some fringe tokens and popular tokens, like we had Chainlink, Wrapped Bitcoin. We still support Wrapped Bitcoin because everybody loves Bitcoin. Why not? I mean, that's basically a guaranteed win. If you wrap up Bitcoin, you're going to get trading fees from people swapping to Bitcoin, and you're going to get the cumulative value of Bitcoin all in a crypto bond, which has its own higher risk, higher return values on top of that. So you get this dynamic instrument, right? That is kind of like a mini hedge because you're getting a little mini portfolio of different cryptos. That's the ingenious thing about it, I think, is that not only are you getting the token, but you're getting trading fees from it as well.
Right.
And the rewards on top of that.
Sorry, I just noticed your mouse over here. I didn't realize that was.
Oh yeah, there's lots.
Toggle between the token and the your
dollar value.
There, yeah.
Right. There's lots of hidden little things that you can click on and move and do things. I like to hide stuff in there, and I just like doing that. I think it makes it more entertaining. You might as well get some entertainment from it while you're at it. The whole scene kind of has a 3D effect. It doesn't translate over the stream very well, but when you're looking at it on your own computer, you can really see the mouse movements and stuff like that.
Yeah, it would be cool to be able to, because I think one of the things about NFTs is they're super cool, but we haven't really gotten to the point where it's like, how do I display them? I know there's the metaverse and there's some things that you can, but like a lot of times it's like, well, let me just connect my wallet to an NFT marketplace, and that's the way that I view my stuff. Versus, so it'd be cool, like in the office to have, like a live screen on the wall with the NFT on it here, and I can just see it.
When I went to Bitcoin Miami, I saw several of those.
Yeah.
And I asked them about displaying our artwork on them, and they said, well, currently we only support square JPEGs. And I was like, not even animated GIFs? And they said no. And I was like, that's rough. You need at least to play a movie on one, right? I mean, VCRs could do that in the 80s. Come on, what's going on? And and they were expensive, so I couldn't really recommend them to people. You could just hang your own monitor on the screen, on the wall. You can get a digital picture frame, load it in as a JPEG, and save yourself a whole lot of money because you own it. And so when we were thinking about that in the, I haven't pushed that update yet, but being able to download the actual image was on our roadmap so that you can just download it.
Yeah. That's cool.
Yeah. And that way you don't have all the movements and stuff.
Yeah.
But you can put it on your own picture frame.
Well, I know we've been going for a good. We're over the hour mark here. We're at 3:09, and so.
Oh wow! Yeah.
I'm thinking probably. Hey, let's wrap this up in the next 5 minutes. So why don't you share your outlook and what you're excited about as far as Bitcoin or the rest of the market or anything?
Well, what I'm most excited about, Kirk, I've developed a new token. It's not just a new token, it's a new type of token. And nothing like it exists right now. I know that sounds super hyperbolic. There's no way not to sound hyperbolic about this. But if people want to find out more about it, they can follow me on Twitter at Cryptogenic. On Twitter, it ends with a K instead of a C. And I'm going to be posting a link soon to our new Discord where I'm going to unveil it. We have a website already finished for it. We have all the smart contracts already finished for it. We have the DApp already finished for it. Everything is almost ready to go. We're waiting on legal. Legal has been just so thorny in this environment to get anything done or accomplished. It seems like the news every day always makes them come up with more stuff, more hoops we have to jump through. It has been the bane of my existence. The technology I've got locked down. It's insane, but That's what we're waiting on right now.
It's always the regulatory friction. So it sounds like you're going to be dripping some alpha and so on about the project. So that's why you got to get connected.
Yes, because I've seen, so there's been a lot of buzz, and I know we're over time, but this is important to say. There's a lot of buzz about this new 404 token, and when I saw it at first, I was like, oh no, they figured out what I figured out. And then I looked at it and I was like, oh, this is some horrible trash. This is some garbage fire level nothing. This is a nothing burger. They talk about fractionalizing NFTs and all this other stuff, and it's awful. The code's awful. The concept's awful. It's not very useful. Nobody's asked for it or looked for it. But the technology that we're about to unveil is going to spark a whole new wave of meme coins, copycats, and people losing their mind over it. Because it's just as revolutionary as when we created an NFT that locked up liquidity. Uniswap did it 2.5 years later with their Uniswap v3. This thing that we have right now that we're about to unveil is going to be so useful. People will wonder why they didn't have it in crypto before.
Interesting. I can't wait.
Oh yeah, it's absolutely bonkers. It also takes from a lot of lessons that we learned in building Sync Network. It has a lot of similarities, but it's almost a three-way token. You want to think of it that way.
That's awesome. Yes, I'm so looking forward to learning more about that. Well, I guess the thing here is it's an exciting time. Well, let's go back. Actually, let's see where we are here. We got 37 blocks to go, 6 hours, 9 minutes, 50 seconds. And it's going to be an interesting time, a very extremely rare event. And really have appreciated having you on here today.
Kirk, I always love talking to you, man.
Having a trip down memory lane, So the thing here is, in a world of lots of naysayers, a lot of negative narrative. Of course, I just look at it as a positive too. Like I still can't believe Jamie Dimon still spews off like these ridiculous things about being a Ponzi scheme and I just can't. And then of course you got.
I can talk about Jamie Dimon.
you had the head of let's see, the head of the wealth management unit, I believe it is, right? At Goldman Sachs. I can't remember her name, but this just came out a couple weeks ago. But she's like, yeah, I just can't see how we cannot see that crypto and Bitcoin is an investment asset class or an investable asset class or something along those lines. I'm like, are you serious? And then you got the Vanguard CEO saying, no, we will never, ever recommend crypto to our clients' portfolios. We will not make this as an available investment option.
That's because they're trying to buy it all up, and they don't want other people buying it up until they've loaded their bags.
That would be the dirtiest trick of all. Would be to, talking down the two sides of your mouth. But the thing here, the thing is, I could actually see a day where we talk about fiduciary duty. And of course, there's varying different degrees of that, but you have a duty to the same. You have a double-edged sword or two sides of the same coin as far as fiduciary duty. So whereas you could violate that duty by recommending something that would not be an investment that's not appropriate for your client, the opposite of that is failing to recommend something that is appropriate for your client. I actually believe that I could foresee the time when we have a class action lawsuit from Vanguard, like specifically Vanguard, clients and/or even this Goldman Sachs, for example.
Yeah, you can look up on the news. Goldman Sachs. Just put in these keywords. I'm sorry, it's not Goldman Sachs. Put in J.P. Morgan, nickel warehouse rocks, because they were playing the nickel market and they said that they had all this nickel, but when someone finally went to go and quantify it and audit it, they found out that the warehouse was not full of nickel, it was full of rocks.
The case of this just came out, the case of JP Morgan's 54 tons of fake nickel.
Yes. Yeah. And so trust me, they hate Bitcoin because we can prove if it's there or not without having to go and give them an audit.
Right.
And they hate that aspect about it. They want to say, we've got 1 billion Bitcoin, we'll sell you, as we'll drive the price down into the ground, and then they'll buy the real Bitcoin. That's what they do, and they've, gosh, I wish I could say that was a one-off thing with that warehouse of rocks, but that is like the modus operandi for JP Morgan and these other big players. They have no qualms doing these kind of things.
Yeah, it's we could actually go on for hours. We should continue these great discussions here. Again,
we should, yeah.
The thing here is with all this, I think one way to wrap up here is that, one of the things we say in crypto is you got to do YOR, do your own research. You got to educate yourself. Benjamin Franklin said, an investment in knowledge pays the best interest. And one of the things I like to say is, and I borrowed this from Walter Wriston, I repurposed it, but what I say is that information about crypto is more valuable than crypto itself. So, and that, you could dive into that one, but it's so true in crypto. Information about crypto is more valuable than crypto itself. I know how we can dive into that deeper, but one final takeaway here is a quote by Bruce Lee, which said, he said, absorb what is useful, discard what is useless, and add what is your own. And that's what you got to do with all information and everything that you assess in the world. So take away what you like, discard what you don't like, and then add in your own unique piece and make your own.
Oh, I love that.
You got to make your own decisions. All right. So it's been a fantastic day. Thanks for joining me. And here's to the Halvening later today.
Awesome. All right. See you later, Kirk. Thanks, guys.
Bye.
Bye-bye.